Welcome to the October 9th, 2023 Advance Report for McGowan Group clients and NetWorthRadio.com listeners. I'm Spencer McGowan, your financial weatherman with the weekly fast-paced tour of the global financial markets. I'm President, McGowan Group Wealth Management, a team of 10 serving affluent families as wealth manager right here from the Crescent in Dallas. You can go to NetWorthRadio.com and contact us there. This week, big news in the oil patch, and I want to cover the history there and what's ahead for the next year. So, recently, West Texas Intermediate crude went from 65 to 95, it was about a 50% increase, retraced about half of that, which is actually a pretty good technical pattern because that's now considered support. The companies were priced at about 5 or 6 times cash flow when oil was 75. And this week, big news. ExxonMobil is in talks to acquire Pioneer Natural Resources based here in Dallas. Congratulations, Scott Sheffield, on a great career. He's retiring at the end of the year, and it looks like that is a go for that acquisition. The oil patch is heating up. There was another Civitas acquisition for $2.5 billion this week. Pioneer's being taken out for about $60 billion, according to the Wall Street Journal. What does that mean? The whole industry, by our calculation, is trading somewhere between 5 and 6 times cash flow. That'd be like buying a rent house and getting near 20% net cash flow from it. You do that all day long. The acquisitions could lead to 10 times cash flow instead of 5, which says that the energy infrastructure could be one of the best bargains and certainly a great inflation hedge. And that part of the portfolio, celebrating that Pioneer spiked over 10% on the final trading day of the week. Now let's get to the broader market. This is the Dow Jones Industrial Average, and I want to cover that government shutdown thing again. So, back in 2018, this will sound familiar. We had a relentless Fed tightening cycle, and at the same time, there was a looming recession. That sounds familiar. And then there was the dreaded government shutdown, and it lasted 35 days. It was the longest in history. It was an argument over the border wall, Trump and Congress. Now, look what happened here. The Dow did hit a low in December. That was the end of a bear market. It was down 20%. Well, at the same time, the Federal Reserve said, hey, we're going to pause on those rate hikes, but we're going to do potentially 2 or 3 more, just like they said this time. And then the government shut down for 35 days. What happened during the shutdown? Oh, the Dow went from below 22,000 back to about 24,000 during the shutdown. Wow, okay. So it wasn't catastrophic. And then a few months later, up to 26,000. So when you hear government shutdown, history shows that it's not necessarily a bad thing for those of us that are enterprising and are not furloughed. Now here, this is what really spurred the sell-off in the Dow. So the Dow was 35,000 back in September, now it's 33,000. What happened? Part of this is the price of a 20-year Treasury went way down. The 10-year Treasury spiked all the way to 4.8%, the highest in 16 years, the highest mortgage rates in 23 years. Wow, the value of the treasuries wilted. If you had the Vanguard Long-Term Government Securities Fund, for example, you think, okay, that's safe. Maybe it's down 15% for the year. That's a wow. And you started with just a 2% yield. That's not much consolation. So this is ripping through the system, finishing off the Federal Reserve's relentless path to rates that are high enough to get inflation down. And the markets are schizophrenic because on Friday, they announced 336,000 net new jobs for lucky people in the U.S. economy in September. That's actually that's great news for the economy. It's not a recession. But then the market started to worry. That's why the Dow went to 33,000. 1, Treasury rates are higher, and 2, They're worried that great jobs report, the Fed's going to raise rates again. But the Federal Reserve's own predictions, they are moving towards 2.5% over the next 3 years. What happens when they start to bring that rate down? You inflate the value of high cash flow assets. Discounted global high yield could be a huge beneficiary, starting with a yield near 10%. Wow. Here we go. What else is ahead? 2024, 2025. I know it's hard to think in terms of 2 years instead of 2 minutes if we're watching CNBC, but here we go. Look at this. This is your earnings recession. 2022 earnings were down. This is JP Morgan Asset Management, does great research, and here we see the projected analyst estimates raising the earnings of the S&P 500 over 20% in 2 years. This quarter, earnings announcements are going to start in the middle of October. Well, that's next week. And they're projected to be 7.6% over last year. Wow. That is great news for the value of high cash flow companies. Wow. That says don't be too pessimistic. Here is the Fed projection going from 5 point something on the overnight bank lending rate, the cost of capital, and that's a money market essentially. You get that in a Treasury money market, and it goes to 2.5%. That is a decrease of near 3% by the Fed's own projections and the economists that put this together. What does that do to the value of good high cash flow assets? It gives potential gains over the next 3 years in addition to generous income. Something got its clock cleaned this week. So in the show at networthradio.com, that's the longer play podcast, or you can go to Apple Podcasts, just type in Net Worth Radio and you'll see it there. That's the program where Alex and I take this into more depth in portfolio management. During that podcast, we were covering that this inflates the value of assets going forward. The cap rates actually, if you will, this comes down, values tend to go up. That's actually good forward news. We also have a section called Skid Row. Here's Skid Row. This is Rivian. Rivian actually went down 25% this week. This is Rivian from inception. Hit 180, now it's 18. So it's down 90%. Electric truck maker Rivian, $93,000 truck, by the way, we looked it up. Nice truck, however, they lose money on every truck. They've lost more money every year, and they're burning cash so fast, even with the $1.5 billion they raised by selling equity through a convertible bond. Wow, even with that, they actually only have 2 years to survive at the current burn rate. There was a realization that ripped through the clean technology this week. The companies that are not making money, not likely to get any more capital, and iClean, the ETF for clean energy, actually went down 30% in the month of September. So, don't own companies that lose money. I'm Spencer McGowan, President, McGowan Group Wealth Management. Thanks for tuning in. Be sure to subscribe. You'll get the updates when there's a fast market event, and you need to know as an investor. Thank you for tuning in to Net Worth Media today and our efforts over the past 2 decades to educate clients and help clients make great decisions. That's the reason that we're here at YouTube McGowan Group, Apple Podcasts, Net Worth Radio, and networthradio.com. The Net Worth Media effort is designed to help you make great decisions and address value at risk of loss, fluctuation in the markets. Remember, if we talk about a security, doesn't make it a recommendation until you come down and get a plan from McGowan Group Asset Management, the team that cares. You can set a Zoom meeting or an in-office meeting at the Crescent, and we'll give you a written plan that encompasses what we believe to be the best allocations. This is a team of 10 devoted to you. That includes the research that you see each week from Reuters, from Bloomberg, and from the best sources. We always post links at networthradio.com for what we believe can help you make great decisions, the research that comes up. Now, the Net Worth Media effort is also designed to address cycles in the market, value at risk of loss. At networthradio.com, you can get the ADV form that shows, yes, we're a fiduciary, a registered investment advisor. It covers the costs of hiring our team to help you in the future ahead. It really helps to have an expert team on your side that you can reach by phone, email, and of course, a team that's here for you every week to address what's going on in the markets, because anxiety can often lead investors to make decisions that are either dangerous, chasing things, or selling things when they shouldn't. And that's a big part of our planning effort at McGowan Group Asset Management. Thank you for tuning in, and we look forward to serving you and your family in the years ahead.